the other question really is again where people are starkly divided, and that's on commodities. There are some people who say that, oh, people are rubbing off or saying that commodities have done their bit, don't quite understand multi-year cycles. And then there are others who are saying that even in a multi-year cycle, there could be a large corrective phase, and maybe commodities are at that point from where the large corrective phase could begin. So my question to you is, I heard you mention about how commodities could come off from where they are right now. What about commodity-linked stocks? Would they come off too? Are valuations already pricing in all the positives, or would earnings growth, which might still stay strong, help cushion the downsides here, if there are to be downsides?
So the way I think about it is this: is that if you're going to virtually most of the world going to or heading towards a slowdown recession, Europe's definitely going to have a recession. So therefore, and your consumer, and if you look in the UK and Europe, you're seeing that they're spending more and more of their discretionary money on energy bills, higher mortgage prices, and food prices, and food. So obviously, their discretionary spending is going to start to fall. Therefore, your commodity prices will start to fall because demand will not be there. And then what happens is that commodity prices fall, and for your commodity-linked companies, obviously they're going to start reducing prices, so they don't get that margin pickup that you used to have before. And obviously, if demand slows a lot, well, operational gearing could also work against you as well, because you're not manufacturing as much and you're not selling as much. So those are the two headwinds, right? So that could take commodity price. I need to talk about kind of metals and not oil, because I still think there's a demand supply imbalance there. So if that happens, then as you come into 2023, that's when that capex cycle will start to pick up. And commodity prices will start to kind of rebound again, but not to the levels that we're seeing more recently because of supply disruptions.
Okay, my last question on commodities, Andrew. Many people who are now saying that oil is the new data. For the decade, the big call is oil and energy because the world is underinvested and therefore it will stay higher for longer. Energy upstream companies could benefit if they're efficient enough. My question to you is, one, do you believe, are you in that camp in the first place? And two, even if you are in that camp, can largely inefficient energy upstream companies out of India also benefit from this, or will investors want to stay away? I mean, what is your argument when you are pitched this upstream energy call by maybe a sell-side broker, and you have to either tell a no or a yes?
Yeah, no, it's a good one. It's a little bit confusing actually, because on one side, let's just take a company, a global company, let's say Shell, right? Now, should they be investing more because obviously oil prices where they are? The answer would be yes in normal circumstances. But then again, when they start to do that, you're going to have all the ESG type problems for the board, the governance, and everything else playing against them, and they get derated. So I don't see them kind of rushing to do a lot of investments going forward, because in 2 to 3 years' time, if this green energy is going to be the place to be, why would you go to traditional kind of ways of having oil? So I think that's where you're going to see the kind of capex cycle moving more towards that side of it rather than traditional. So I don't think this is going to. I think it's going to be those companies which can transform from the traditional way of energy to the new levels of green energy, and I think hydrogen is probably one of them as well.